I get this question all the time. Do I need to report crypto on my taxes if I didn't cash out or if I didn't have a gain? And the answer to that is yes. Even if you didn't cash out, you still do need to report crypto trades on your taxes, unless you simply bought and hold. Any transaction, any disposition, sale, exchange, typically even a swap, is a taxable event. It's treated as if you sold that first token for cash or fiat and then bought the second. And this does need to be reported on your taxes on Form 8949 and Schedule D. And if you take a look at Form 8949, and it's something that I do every day, you'll see that it actually requires line by line that you identify the date that you acquired the crypto, the price that you acquired it for or your cost basis, the date it was sold, and the sales price, and the description, including typically a volume and the token that you've sold. And you have to include this for every single transaction, every swap, every exchange, all of the above. And if you might be thinking, well, I only have a loss, so I don't need to report this, you would be mistaken. In fact, what we've seen time and time again is that the IRS targets taxpayers, targets people who did not report crypto at all on their taxes, may even have a loss or small gains, but the IRS doesn't know that. The IRS instead, because right now exchanges only provide very limited information to the IRS at best, the IRS will know that you've got trades or that you have sales, but they won't know that you have gains or losses with each of those sales. And so it's very important that you report on your taxes the actual transaction and show if it is a loss or you broke even or if it is a small gain. We've seen too many times that the IRS comes up with their own calculations, usually applying zero cost basis, and then sends a nasty notice or bill to the client or taxpayer thinking that they owe a large amount simply because they didn't report. And so it is very important that even if you don't have gains, even if you haven't cashed out, that you still report. Cashing out to a bank account does provide even added risk if you haven't reported crypto on your taxes. And that's because the banks will see generally that it's coming from an exchange. And we've had clients that have had their bank accounts closed and shut down because they haven't reported in taxes in the past, and now they're cashing out. And it's just another way for the IRS to get information, usually of cash outs. And that's because the banks will issue transaction reports, suspicious activity reports, and currency transaction reports to the IRS if you take cash out, which we see happen often too when people cash out crypto. So if you cash out especially, you definitely need to report. Even if you didn't cash out, it's just as important to report.